Welcome to Illuminati Silver. We tell you the truth about silver. Today is Saturday the 19th of March 2016 and we're providing our gold and silver update for week ending the 18th of March. Gold rose in US dollar terms last week by $10 from $1,245 to $1,255, having been as high as $1,270 and as low as $1,227. In sterling terms, gold rose by £1. And in euro terms it fell by €3. Silver rose by 32 cents from 15.49 to 15.81, having reached a high of $16.11 and a low of $15.22. In sterling terms it rose 15 pence, and in euros it rose by 0.13 euros. The gold to silver ratio fell from 80.3 to 1 to 79.4 to 1, its second consecutive weekly fall. The Dow Jones closed on Friday at 17,602, up 120 points on the day and up some 389 points on the week. And the NASDAQ closed at 4,795, up 20 for the day and up some 47 points on the week. Brent crude was almost up $1 on the week at $41.20, and US light crude was also up almost $1 at $39.44. The dollar index stands at 95.08, down 1.09 on the week. Gold ended an interesting week at $12.55, after jumping to $12.70 following a dovish comments from the FOMC, putting off rate increases until later in the year. Gold headed for a weekly gain as the dollar fell after the US Federal Reserve dialed back forecasts for interest rate increases this year, igniting a commodities rebound. With the SPDR Gold Shares, the world's largest physically backed gold exchange traded fund, up nearly 19% year to date, and ranking as this year's top asset gathering ETF. Perhaps it's not surprising that there is a growing chorus of naysayers claiming that now is the time to sell gold and gold ETFs. Silver is interesting to note. The latest CFTC, the Commodity Futures Trading Commission, data for the week up to March the 8th showed the net long fund position climbed 4,404 contracts via 1,272 contracts of fresh buying and 3,132 contracts of short covering, which was bullish. One potential dampener is the long position is already high, and with the short position at 9,995 lots, down from a peak of 63,993 contracts in July and 47,746 contracts at the start of the year, there may not be much more short covering to be done. Some argue that silver's charts look more bullish now, with the gold to silver ratio having been at its highest since the 2008 peaks, and has been at an extreme, thereby suggesting silver prices are cheap relative to gold. The ratio may be turning lower now, which is bullish for silver. And with the Fed worried about the global markets and turning dovish, the background has improved for gold, and with it silver. We are a little more cautious in our thinking, as our very basic gold and silver performance chart shows that over the past year, silver has consistently underperformed gold until this month, when it more or less equals its rise. This supports our hypothesis that silver's rise is the consequence of the gold rise, held back a little because of reduced or lower industrial demand for it. The trend between the two currently is almost inseparable, and we suggest that a mixture of gold demand by investors plus a slightly weaker dollar has indeed benefited silver. The gold to silver ratio is, in our opinion, worth watching, but currently is of limited importance. Why? because it is highly unlikely people are going to sell their gold and swap it for silver. In a rapidly rising market where one is a clear laggard, perhaps so, but under current conditions we cannot see this happening, and indeed, with concerns over industrial output, we still expect to see a high gold to silver ratio. Now, if what the governments are telling us is the truth, and that the world economies will grow, and in future years, and will grow steadily, then we shall indeed hold a different opinion, but not until then. Technical analysts are stating that gold may now be in a position of consolidation within the 1220 to 1280 level, while silver will oscillate between $15.20 and $16.20. Indeed, we see this too, and are noting with greater interest the actions of other central banks in response to a slightly weaker dollar. At this stage, we just reiterate that should you be underweight in metals in your portfolio, then you should at least consider purchasing on dips. For those who are living in countries other than the US, which are adopting negative interest rates and feel that rates may go even lower, should bear in mind that the acquiring of gold and silver should be considered as a hedge. We hope you have found this video interesting and informative, and if so, please give it a thumb up and share it on Twitter. Also, kindly visit our website at www.illuminatisilver.com and look at our Facebook page, which is updated daily at www.facebook.com/illuminatisilver. Disclaimer: Illuminati silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.